Yo, yo, what up, River? How was your vacation, bro?
Oh God, we got Norberto this early. Oh, dude, it was good. It was good. Had a great time.
Nice, man. That's always good.
Yeah, man, had a good one. Got a little sick though, so vacation got extended a couple extra days.
I like that.
Yeah, I wish it,
Yo,
I wish it was fake sick though.
right?
Yeah, dude, I wish it was that sick just to get me out of work instead of actually being sick and just dying on the couch.
Yo, River, do you get sick pay?
Yeah, you should definitely tag Anth and tell him I deserve it.
I will let him know. Yo, River, before you start class, you think you could go over meta? Thanks, man.
Fucking Norberto, dude. What are we gonna do with this guy? Ooh, breaking down. Uh, wow, that was a mean double top. I mean, I hope you guys shorted that double top. Like, what? That was free money right there with like no risk. Wow, that was money. Could have caught a $40 flush on that thing. Even could have taken the retest and caught a $35 flush on that thing. Rudy, how you doing? 1K, good to have you. Starter, welcome, welcome. Just checking out Norberto trades. Rob's, what up? What up? You know, I mean, let's be real here. You basically just got to trade that 700 psych number now that we're at it. I mean, I think if we get under there, you'll likely go poke down to maybe, I mean, you might kind of go to this little mid-range down here. And these are just daily levels. Obviously, there's stuff going on between all this every day. Um, uh, But we break that 700, I'd go looking for maybe 691. We get under there, go look for that 682. Even that, I don't use them often, but that daily 50 EMA looking pretty nice. But I mean, it's pretty real. That's pretty like solid technical breakdown. I bet you even if I slap this trend going up here, something like this, I mean, that's breakdown mode on that thing, honestly. That's breakdown mode.
Yeah, I was looking to take a long, but I was talking to Luigi, and he was all like, "Yeah, just wait." And dude, I'm so glad I waited.
Yeah. And like, yeah, it's definitely like I mean, I will say if you're looking long, it's right here. It's at 700, but you got to run like you got to be prepared for the breakdown. Run that tight stop on it. Let's be real, we're heading into tech ER. A lot of these tech names likely sell for maybe a couple few more days, maybe, and then uh, we'll start pushing. We'll start pushing into those some of those names as they start popping up. We got Netflix out of the way today. So I think we'll start to see some pushes on those tech names, and then we start to see how those ERs are going to play out. So if you're looking for a bounce on it, right here, it's off 700. I mean, like 700 spot. You get. I mean, that's 700.08, but it's 700. Worked well today, even. But you got to be prepared to admit you're wrong. Tight stops really just going to be any sort of 15-minute closes under that 700. Wide stop's going to be any sort of selling under that 697.
Yeah, thanks, River. And it was Meta, and I have Wells Fargo too. I really like that one for a swing.
Yeah, Wells Fargo had that weird news going on. Yeah, but you know me, dude. I love banks, and I've been loving banks. Happy that you're finally on board. No shocker. Here's Norberto. Let's get long financials now that we've rallied 38.7% off the bottom.
Yo, I was waiting for a dip, bro.
I love you, Norberto. You're the fucking best. Welcome, welcome, everybody. We'll give this a few more minutes. Rob's, hey, you know what? Break even. That's pretty sweet, man. I talked to another guy today who was not so lucky. And I'll tell you what, break even is awesome compared to deep red. That's for sure. Matt, how you doing?
Hey,
And
River, I just want to say real quick. I was looking at my profit loss statements from last year versus this year, and last year I didn't know shit. I lost 6 grand.
uh-huh.
This year, my year to date P&L is minus $80.
Bro, congratulations.
And I'm trading almost the same volume, I'm just
Bro, not
not
even
uh,
joking.
not catching them
Congratulations.
runner too often.
I mean, dude, you should be stoked on that. I'm telling you right now.
I'm
No,
hella stoked on that, bro. When I saw those numbers,
yes.
shit.
Like, dude,
Dude, that's huge progress, man.
it is like, that's like, you should be so hyped. I mean, all of you guys have heard me say it a million times that like, dude, sometimes like stopping out of the trade before you're clobbered and you still lose money feels so good. Doing the right things, doing the right steps feels better. Like sometimes protecting your money, you have a red day. Sometimes the fact that you didn't get absolutely demolished when, your trade, you stop out and then it dies. Sometimes that feels better than a green day, knowing that you made the right choice. We're all right, we're all wrong sometimes. Getting headed in the right direction is all that matters, and so you go from minus 6K last year and you're down $80 this year. That is like a ridiculous amount of improvement, in my opinion. I know everybody wants to like hit the big old bangers and the runners and make all this money. And, they see those of us that do trade a lot, me, Tilio, I mean, 1K Nando, those of us that are consistent. Um, uh, it didn't happen overnight. It didn't happen in a month. It didn't happen in a year. We've all had bad times. I mean, I've had days where, I mean, I'm obviously not going to quit, but I reach out to Tilly and I complain. He tells me to grow up, but we've all been there. I've talked to 1K, 1K's had a rough patch or two in his time. We all have. And all you do is you reach out, you work through it, and you try to start taking the steps in the right direction. So being, going from big red to, I mean, $80, bro, you're break even. Like round up, who cares? You're break even as far as I'm concerned. That is epic.
Yeah, it was like 78 and some change, but I almost thought about sending you a DM with the screens of them to just to prove it, because I ain't bullshitting when I say it, this Discord has helped me a lot. So
Dude, congratulations. I absolutely love that. Let's see,
Dude.
Matt, we got a lot of people rolling in here. Matt, how we doing? Ben, I'm assuming that's Matt that's been DMing me. Loving your messages, loving your questions. Keep those coming for sure. Oh yeah, Crash Miss, I know, man. I know. I cannot wait. I cannot wait for everybody to be massively long for NVIDIA ER, and I'm short. Yep, Pepe, exactly. Oh, we got Norberto. Norberto sharing gains. Well, Hefe, let's get you on the right track, let's get you on the right track for sure.
Yeah, we're here, man. It's Carl too. I was listening to you earlier.
I assumed it was. Yeah, I assumed it was. Yeah, and good
Yeah.
job for being here, and this is a big class, we'll start talking here. Husky, how we doing, Matt? We'll start talking here. I got to make one more post.
Yo, River.
Norberto.
Yo, Toasty said if you could check Roblox.
Bro, I sent him the chart just the other day. He's just dude, you guys probably don't even know like the dude, Toasty hammered it here. He stopped out like here. Obviously the right decision, looking back, obviously the right decision. And then he hadn't looked at it. And me and Norberto told him to pull it up and he was like 105. And he went silent in lecture for a second, I mean, he just went silent. Always hurts when you do that kind of thing. We've all been there though. But he got wrecked. A lot of shares and a lot of long options. It's not good for him. He never joins my classes anymore. I think he's like working and stuff. Okay. Let's see. Got my post made. Let me take a drink of water. So welcome everybody. Happy to have you here, Dirty River. I apologize. I'm a little hoarse today. I'm a little sick. I'm getting over a bit of a flu, and so I probably sound a little bit funny. But just talking trading psychology tonight. It's 100% without a doubt one of my favorite things to talk about. For anybody, anybody who's traded and voice chats with me, DM'd with me, anything like that. A lot of what I teach, I can teach technical analysis. Obviously, I love technical analysis. I love to teach it. I think it's an absolutely crucial part of being a day trader, a swing trader, any of that stuff. Obviously, if you're a long-term share buyer, you shouldn't just be buying shares every day. You should have a plan behind it. But technical analysis ends up, really taking a back seat to maybe fundamental analysis or just really big picture views. So, we really study technical analysis for these short-term things, trying to identify repeatable patterns in the market, whatever it is. And I don't want to take away from what I teach, take away from what any of us teach or what we do. Teaching technical analysis is easy. Learning technical analysis, doing technical analysis is easy. Don't get me wrong, you can get extremely advanced into different things that you're looking at and blah, blah, blah. There's always more to learn. But if you don't know how to do support and resistance, trend lines, any of that, we have lectures in here. I've done them. 1K's done them. Toasty's done them. And we've all done these lectures on it. You can really pick up the basics of technical analysis in some hours. Are you going to be good, like amazing at it instantly? No, but you can go identify major points on a chart very quickly. Where should trend lines be very quickly? It's relatively easy. It is the easier side of trading. The hard side of trading, the most difficult side of trading. Day trading is a very difficult thing. Statistically speaking, you're talking a 90% plus washout rate. That means 9 out of 10 people aren't going to make it. And I'm willing to bet, I can't back this up with any sort of evidence or proof or anything like that. Those people failing are not failing because of the quality of their technical analysis or fundamental analysis or anything like that. They are failing because of trading psychology. Trading's easy. Clicking buy where you should click buy, clicking sell where you should click sell. We can all program ourselves to do that. It's actually doing it. It's actually building these plans. It's not averaging down. It's not doing all of these bad habits that people form that make you fail. And it always comes back to trading psychology. Even we're trading against computers. Those computers are still, hopefully we're trading with in the same direction as computers, those are all still programmed by people. They have a human element to them. They have trading psychology. They say we need X, Y, and Z to line up to do this. And so trading, the actual technical aspect of it is easy. Trading psychology is difficult. It is what makes most people fail. Again, I'm not backing that up with any statistics or anything, just experience and talking to people. I've traded for quite a while. And so talking with people, meeting people, reading other people's writings, doing all of these things. And you very, very quickly realize what makes trading hard is us. We get in our own way. We take a trade that we shouldn't even take, or we average down a trade that there was no plan of ever averaging down that trade. And those are the things that really start to get you. One thing leads to another and your whole port's in a trade, or you're deep red and all of a sudden, or you take a couple losing trades in a row and you say, okay, well, I'm going to, go heavy on this one to make up for those losses. I'm not even trying to make money. I just want to cover the last losses. And then you lose more. These are all trading psychology things. You guys know, as I said, I love to teach technical analysis. Tonight, what I want to do, and I do always kind of try to do it in my trading psychology classes, is I want to teach you how to use the trading psychology that you learn. A lot of people know, a lot of people have asked me, I know Rob's and I have talked about it, a bunch of us have talked, or I've talked to a bunch of people about it. I'm not a big trading psychology book reader. I've read, Mark Douglas, of course, Trading in the Zone. I think there's another one, A Disciplined Trader. There's one Lambos Loves he sent me. I don't remember what that was. If he's in here, he can tell me that one. I read Tom Haugard's Best Loser Wins. I'll read them, but it's just not for me. I'm in I don't want to say lucky situation, but a different situation than a lot of people, that when I first started trading, it was shares. It was, it was much lower risk. Everything moves slower. Everything is safer. You can't go minus 100% on shares. I mean, you can, but you can't like it's really hard for a share to go to zero, you know. So I got to learn charts, I got to learn technical analysis, I got to learn how the markets work in shares. And then I got to start saying, okay, I'm going to trade some options. I want to learn about options. So I traded options with time. I never did, you know, any weeklies, not really even any monthlies, you know, it was everything with time. So I learned everything a little bit slower and a little bit safer. Nowadays, you know, we see it all the time. People dive into, you know, they come into the Discord, they say, hey, I want to, you know, I want to trade options. Great. Their very first trade, they put everything they got in the trade and then they lose it all. And they're like, what? I don't understand what happened. And that is again going back to trading psychology. They don't know what charts are telling them. They don't know what anything's telling them. So people just kind of dive in. Because I didn't have to do that, I've never been, you know, reading. I read the trading psychology books because I like to read, but it's not something that I spend a lot of time on or anything like that. It's not something that my, I guess what I'm trying to say is my trading psychology does not struggle. I don't face a lot of the same issues that other people do. When I'm wrong, I stop out. You know, when I get to a point where I should sell, I sell. You know, if my plan tells me to sell, I sell. A lot of people can't do that. And so tonight, that's what I really wanted to focus on is applying some of these ideas to the charts. And I think, in my opinion, trading psychology is a part of all trade plans. Whether we realize it or not, you know, whether it's, you know, me or it's 1K or it's whoever making up a trade plan, we don't necessarily say, you know, here's the trading psychology section of my trade plan. But, you know, with him or I, we might say, I will only buy calls here. And then I will only buy calls there. Whether we realize it or not, that is trading psychology. That is our brain saying, this is where I want to purchase calls. And so that's what we're going to focus on a little bit tonight. I'm going to use a trade that a couple of people are in. I'm in a, I'm well, and I'm down to a runner personally. I'm going to use this trade as just an example of how I trade, how I view charts, how I use trading psychology to make these decisions. And I'm hoping, you know, there's going to be people in here. I know a bunch of you all trade with me in voice chat and stuff. And I love getting asked, hey, what do you think of this trade? And what I always tell people is, hey, it's not for me. Maybe, you know, maybe it'll work, but it's not for me. And that is, again, just going back to my trading psychology. There is something that on those charts, I will say to myself, I will not, you know, take any action on this trade until this point comes. That is the biggest part of trading psychology, in my opinion, is using it to control your entries and to control your exits, whether it's a stop out or a take profit. We're going to talk about both today, because it's when we start rushing into trades, we start losing money when we start doing things that weren't part of the plan. You know, we aren't really going to be talking about, you know, we buy here, sell here for specific reasons, but I'm going to, you know, generally talk about, you know, I'm going to use one specific trade. I'm going to generally talk about it, and I'm going to talk about how we can use our charts to help with our trading psychology. And then this is probably going to take, I don't know, 15, 20 minutes. I'm again going to leave all the mics unmuted. Feel free to ask questions. Again, we're going to do a little bit of technical analysis, nothing crazy. Quick support and resistance, couple trend lines. That's it. I'm going to do them really quick so you guys can just kind of watch what I do. And then we're going to talk about the charts and what those charts should make our brains think, at least for me. And I'm going to say, I trade, you know, of the people in here, you know, me, Tilio, Shark, 1K, we have very similar trade styles. Our entry ideas might be different, but, you know, we look for very specific things to line up. And then we do absolutely nothing until that happens. And so, some of the other people in here, they trade different. I'm not saying they're trading wrong or anything like that. I'm saying this trading psychology lecture, and I don't know if 1K is still in here, you know, he can feel free to jump in if he disagrees with anything I say, but it's going to represent more how we trade. And so again, what I'm going to be teaching tonight is me. It's my opinions. It's how I trade. It's how I've learned over the years to use my trading psychology, use my plan building to hopefully protect my money, make my losses smaller is really what that means. And then potentially give me a little bit more reward. And so with that, like I said, mics will be unmuted. If you have any questions, feel free to stop me. And so the trade that I'm going to talk about is super
Hey,
random.
River, real sorry, brother, real quick. I when you get time later, I sent you those so you can
Nice.
see
I'll check it
what
out.
he has done for me.
I'll check it out. I love to hear it. I love to hear it.
Yeah, thank you.
So this is a super random one. NU Holdings. Really, the only reason that I even looked at this was because I saw that somebody alerted it, and then Gator, not sure if he's in here. He's in here quite a bit. He brought it up to me and said, hey, look at this trade. What do you think of it? And so anytime I do, and this is always trading psychology. You always want to zoom out and look at the biggest picture that you can. We don't even need, we don't even need lines or anything like that on here. We need to just look at this chart very quickly and ask our brains, is there an opportunity for a trade here? Again, this isn't a technical analysis thing, but big picture, we can say, okay, we're up a lot. We're putting in nice consolidation. We're sitting well above the midpoint of the major consolidation. So yeah, I probably have some interest in this trade and looking for it to go up. Again, not technical analysis lecture or anything like that. So then we zoom in a little bit more and we start to look at the chart and say, identify things on the chart. And so always, okay, we have a nice trend break going on here with a retest. So we get to say to ourselves, all right, yeah, I'm interested in this trade. Our brain can start to say, I want to develop a plan for this trade. We can even look at this. We got a nice little another trend line going on here. We want to develop a plan for this trade. Then, as all of you guys know, to me, the most important things that we always want to identify are really going to be any major highs and lows, especially on a cheap name like this. It's very likely going to trade super technical. Double bottoms, double tops are very oftentimes going to work, all of that. Want to get any of these in here. So we want to get a few levels on the chart. And so when we started looking at this trade, it was around here. So a very big part of trading psychology is, and I want to teach this to people, and trading, chart trading psychology is zoom out. Like I cannot emphasize this enough. You always need to zoom out. Something that I see a lot of people get hung up on, they're looking at a 1 month chart or, like a 1 month, 1 day chart, or maybe they're looking at a 2 month, 2 day chart. Not me. If I'm pulling up a chart, I want a year. I want to know what it's done for a year. You don't have to get in here to the nitty gritty and really, really look at what it's done, but you want a big picture, because you might see something, maybe you pull up the month of the chart and all you see is maybe, I don't know. I don't really even see a good example, but maybe you pull up the month of the chart and you just see this, and you're like, oh, well, we got a nice little push up and now like we're consolidating. Well, yeah, it does look like you're consolidating until you start to really think about, okay, we've pushed up and actually, yeah, we are consolidating, but hey, we're setting some lower highs here. You start zooming out, all of a sudden you start looking a little bit more left. And what you didn't see, from the month before, well, you're at the biggest resistance on the chart. So people are going to start looking at this and, they're only looking at a month and they're saying, oh, I'm bullish on this thing. It's going to break out. Not realizing that if you're buying NU at 8 to get long, you are longing resistance. This, you might only see a strong push up into, oh yeah, you're setting some lower highs, but it's just consolidation. And then all of a sudden the stock is dumped out on you 30%, 20%. I don't know what that is. From these highs to lows, pretty dang big move, because you were buying resistance 20% down here, down to these lows, because you're buying into resistance. So it's what people get hung up on. They look at these short time frames. I see it all the time. People will share, oh, well, I'm on the 4 hour and I'm happy. I love seeing people zoom out, get on those 4 hours, get on those dailies, get on those weeklies. Don't get on the 1 month 4 hour. Don't get on, don't get on the 1 month 1 hour. Is there information there? Absolutely. But your brain can't wrap around it. Your trading psychology starts to say, your brain wants to say, oh, breakout, strong move up into consolidation, expect second leg. That's what that's what our brains think. And will it eventually do it? Yes. But if you don't start looking left, your brain is always going to be struggling. You're always going to be FOMOing. You aren't going to say to yourself, okay, I'm chasing into a big old double top. I don't want to be long there. This is all trading psychology. We don't, you can, you can, you can do great analysis on short time frames, but they're almost always going to lead to FOMO. So that brings us back to this trade right here. There's a lot of people talking about this, and we start looking at it. And so I was like, oh yeah, I'm actually, hey, nice consolidation here. We know where we don't want to be long. We can very easily look at the chart. I mean, I really should have this one on here too. But I'm going to show you how I actually have it on my chart, I guess. So we know where we don't want to be long. We don't want to be long at resistance. We want to be long at supports, at trend lines, And so that's what I start to do. My buddy Gator brought this up to me and we started looking at it. And, right here, you got to just look and say, okay, triple top, no questions asked. Then when we really start to break it down, we see even more resistance over here. So we know that basically right here, for me, yeah, we'll pull it even down just a little bit more to encompass a little bit more. For me, this zone is the absolute worst place you could possibly be getting long on this chart. There's no reason to be long 1365 up to 14. If you're already long on it, great. So me and Gator started talking. We drew these trend lines. We had basically, I don't exactly, well, I'll pull up my other chart after. We can see exactly, I mean, you can see what I have. Here's my real chart that I've been trading. We see where we don't want to be long, but we know strong trend breakout, and this is all trading psychology. We know what the chart is telling us. We don't want to chase now. We know the chart is telling us breakout, nice moves off consolidation, holding those midpoints of these breakouts. So where don't we long? I'm hoping everybody sees here, right here. And then we watch it for a couple of days and we said to ourselves, I want to get long around 13, 1290, 1280, 1270 zone, or this trend line. So we let it work a couple of days. We let it work a couple of days. We let it work a couple of days. Here's our pullback that we have to 100% have to assume comes, because big resistance, big resistance, big resistances, big resistance, big resistance, big resistance. I mean, when you look at 14, really, I mean, basically 14 on the chart, there's not a worse place to buy calls in a risk reward mindset. And that is what I think is the biggest overlap of trading psychology, is risk reward and FOMO. Sure. Do we think the breakout over 14 is coming? Can we talk about that all we want? Yeah. And I do think the breakout is over 14 is coming. I wouldn't take a call for free right here. If one of you is handing them out for free, I'd say, nah, I'm good. I'll get it cheaper later. This is not where you long. This comes into trading psychology. However, going back to what we were just discussing. So you're looking at your 1 month chart. This is a nice consolidation. And you aren't looking at your big picture. We'll even remove our gray box for now. We get a nice consolidation. We get a breakout up. We see more consolidation. People buy. They think this is a buy because they are not looking at a big enough picture. And I get it. It's, consolidation leads to breakouts or breakdowns. So you see more consolidation and you try to buy these dips. I do not buy here. I do not. Yes, always be winning. Yes. and we'll talk about that here in a second. This is not where you buy. It's a bad entry. I don't care who you talk to. I don't care how much time your contracts have. This is just chasing an upside move. You start zooming out, and all of a sudden, you really start to say to yourself, the market has not, the market has not performed well in this 1360 to 14 area on many occasions. When we get below it, we die. On many occasions, we have seen it not work. So we wait for a pullback, or we wait for a breakout. And this is something you guys, unfortunately, a lot of you probably haven't really got to talk to Tilio that much. He used to be a lot more active in here, but this is something that me and Tilio try to teach people all the time. Pay the premium. Don't chase here. When your breakout comes, buy the retest. Will you, that's the deal. If you don't buy here because this is a bad entry, this is just like, this is the most classic calls at resistance you can possibly do. So you have two options here. You wait for a pullback that does not affect your bullish thesis. You don't, what I mean by that is you don't have a technical breakdown. So, charts tell us, like, this is, not even technical. Like, if we had no lines on this chart, you could kind of just be like, well, yeah, right around here, you don't want to be long and just drag your mouse, but you can remain bullish and think that breakout is coming. The other option is you get a break and retest of that zone. That is when you buy. You don't buy before the breakout. A big part of, my trading psychology is using market statistics. It helps me not make bad decisions. One that I talk about is all the time is most breakouts fail. Statistically, 80% of breakouts fail. So I know this is a hard thing for people to comprehend. If you are a breakout trader, quote unquote, you are trading something that has an 80% failure rate. That's why I recommend to people so much learn to trade ranges. Then you catch the breakouts with the best possible entry. So my buddy Gator and I, again, just to go back to this trade, we do nothing. We watch this thing chip chop around. We watch it push up. We watch it push up. Here's our dip. Easy. We get in there. Now we know, and you have to, so here's where the risk reward comes into trading psychology. Sure, you want this breakout over 14. And maybe it comes, maybe you get that move up and you make some nice little money. You won't make much more than if you just waited for the 14 break and retest, and you will make a mountain less if you waited for the pullback to buy. Also, and so there's the reward side, the risk side. Well, if you buy, let's just say you buy 1365, okay? Fine, not fine, don't do it, but say you buy 1365. Now you have to, as part of your trade plan, say where is your stop loss going to be? Where is your stop loss going to be? If we're at 1365, your stop loss is a solid break under this trend line with a close. Of course, trends are always moving up, market is always moving, but we'll say 1365 down to about 1240. So you have $1.20 of risk on this name, which I also have to point out, it's about a $13 stock. So $1.20 is close to a 10% pullback. Got to point that out. That's a very, very, very large pullback. And what are your targets? Maybe 14? 14 has to be your first target. So, and you should be, if you're buying there and you get the touch of 14, you have to sell. That's what it is. So when you look at this trade, you are risking $1.20 to make 40 cents. I'm rounding numbers, but you're risking $1.20 to make 40 cents. Anybody who studies trading psychology, this should terrify them. Right then and there, they should say this is not a trade for me, because trading psychology's biggest thing is capital preservation. When we quit listening to ourselves, when we quit following our rules, that is when we start losing more money. So just to lay it out there for people, this trade purchasing here, say you're going to trim your first target, stops at break even. That's how you're treating this trade. You have a one reward 3 risk trade. That is a absolutely horrible trade. You need to be right every time. Like, as far as I'm concerned, you would have to be right 95% of the time to actually make money if you're taking those trades. You're not. I'm not. Nobody is right that often. Well, now here's our pullback. So, like I told you, me and Gator, we watched this thing rock and roll 3, 4 days, 5 days, whatever it was. Here's our pullback. You can even go find the message where he tags me on Tradefloor and he says, hey, I'm entering this trade. I also entered the trade. Snuck him in here, right down here. Well, now I have multiple targets. You know, first target up is going to be 13, you know, quick little scalp, obviously. Next major target is going to be 1365. I got in there about 1270, so I'm just shy of $1 reward, potential reward. My risk here, 37 cents. So just by waiting for this, and you know, let your brain do this for you. This isn't even technical analysis. This is just psychology. We want to make as much as we can with as little money and as little risk as we can. That should be the trading psychology thing that is just put in your head. This money that we're trading with is real. We want to use and risk as little of it as possible because to make as much as we can, because that is literally our job. So we took our entry here. And then we got, I don't want to say we got lucky. We entered where we should enter. Then we got the bounce. So what did I do? I don't remember what day this was. Maybe this was Monday or something. What did I do on Monday? I trimmed because we're coming into my level on that close. You have to trim here, no questions asked. So we get our pullback, we trim here. We trim where many others were buying looking for the breakout, and we trimmed for 60%, give or take. Then we get another move up. Well, what did I do yesterday? We're at really big resistance. I took a few of my contracts off because that is what you do. However, we can see the market, you know, price action, we are talking price action, market showing us some strength on this name. Then today we push right up to our 14. We know 14 on this chart is massive. And so what did I do? I'm down to 1 contract. Anybody who was buying back here, they're break even, and I'm happy for them, but it was a bad entry. And now we get to see, you know, now we get to trim down. We're up nice. These are up big, yeah, now. And so now I got a free runner. And now if the breakout comes, great. If not, stops at 70%. People who were chasing the breakout, thinking the breakout was coming, small view on the market, are now breaking even, or are probably in a little profit, but now breaking even for the most part. That is how we have to use trading psychology. Every chart we look at, we analyze on the big picture. Always look at the big picture and let your brain tell you, and trust your brain. Where do we not want to be long? Where do we want to be long? Where do we not want to be short? Where do we want to be short? Those are the questions you should ask yourself every single time. Now, just to, you know, harp on this a little bit more, say this breakout comes. Obviously, right now it's failed because, you know, technically speaking, it has failed because we didn't get closes above our levels. We didn't get closes above these highs. So technically speaking, breakout has still failed. I'm still in 1. I think we might push a little bit more, but technically speaking, breakout has failed. We get the break and we get the retest and we hold above it. Now this trade starts to make more sense if you want to get long. And this is what I mean when back I said paying the premium. You know, are you going to pay a little bit more for a contract because we're higher? Yes, but you're getting the confirmed breakout. You aren't buying before the breakout, getting smoked, riding it back to break even. Are these people going to be in a little bit of profit when you're buying? Yes, not a ton. These people are going to be a massive, but you have the confirmation. So these are the types of things you need to train your brain to do. Obviously, you know, just to wrap this all up, what I'm discussing here and what I'm showing here by using these charts is the embodiment of FOMO and chasing. I've done quite a few trading psychology lectures. I always, like to ask people, what are the things that you struggle with the most? The number one and number two, interchangeable, FOMO and chasing. That's it. Those are the two biggest issues that everybody has. Today, I posted a screenshot. I mean, I think my run is like 130%. I posted a screenshot on Trade4. I instantly got a message that said, "Is it too late to get in?" Yes, it is too late to get in. And that is FOMO. That's that chasing. That's this mindset. They thought I was psycho buying back here. Now that I'm up 130%, they want a piece, and that is the hardest thing for traders. They always think big green candle, there's going to be another one. Big red candle, there's going to be another one. And the unfortunate facts, it just doesn't work like that. And so that's why I wanted to use this chart. It happened to be a trade that me and a few others did take. So it's applicable and we can talk about it all. And then, so again, I had this same discussion with Gator. So you're probably going to laugh because you're probably going to see similar blue circles on, here's my real chart that I'm trading on it. So obviously, levels are a little bit different. Obviously, but here's our entry. Here's where, this was, we put this circle up here. This was the day people were buying, I believe. So we put this circle up here. Then when we got this double top, little micro double top, I said to him, okay, we're going down. And then you can go find our messages. As I said, it was one of these 2 days we were buyers. We got our dip down. We knew our stop was under 1260. We were risking 30 cents or something and looking for this move to 14. You can see gray box. Couldn't be a worse place to get long. 1450, obviously I don't have the whole number 14 on my chart, but it's basically the bottom of this zone. So horrible place to be long. Do I hope we get a little bit more? Of course, I'm in there, but I'm in a runner. We can see the market rejected exactly where we would expect it to. So the great thing about trading psychology, the great thing about applying it to your charts is when you start trying to train your brain to think in the correct way, buy pullbacks, short pumps, market likes to trend, not range. Start training your brain. All of a sudden, your losses will be completely minimized. Your gains will become gigantic. That is the most crucial part of trading. And what I tell everybody is entry is the most important part of any trade. I don't care if it's a 3-minute scalp. I don't care if it's a 4-hour day trade. I don't care if it's a month-long swing. I don't care if it's 1.5 year out leaps. You buy when you should buy. You don't buy at resistance. There's, a big thing in trading is opportunity cost. If you don't have to experience a week of red, why would you? When you can wait for one or two things to happen, buy the dip or let the breakout confirm and buy the breakout retest. There's no reason to be in the trade, but that's that trading psychology FOMO. It's even bigger than FOMO. It's more than just the fear of missing out. It's the fear of not making money. People have this thought in their head, especially newer traders, that they need to always be involved in the market. They always need to be in the trade. We see it tons with the newer guys. They'll have 6, 7, 8, 9 trades open when they could have just waited for one good trade and likely made more money than all 9 of those trades are going to pay them overall. It is quality over quantity in the market. 100%.
River.
And that's what we see with these beginners, is that they feel like they got to be in 8, 9, 10 trades to be making money. When in reality, oh God, I love you, Norbert. When in reality, one good trade. Like I said, this could have been, I got to be honest, this could have been my one trade of the week. I bought these, whatever it was, last Thursday, Friday, something like that. It's the last thing I did before I left. This was the only trade I needed. One and done,
Hey,
and
River, care if I say something?
No, go ahead.
So part of what's helped me start breaking even mostly this year, or close to it, pretty damn close, is having that mindset of not needing to be in a trade all the time. I've been taking far less trades, but better setups, you know, and that has resulted in me not losing my ass.
And it will,
You know?
and it's like, exactly. And that's what I want people to walk away from this. You need one good trade. And let your brain use your brain. You know, like I said, technical analysis is easy. Slap some lines on the chart. And now think about it. Use your brain. Use trading psychology. Where do people want to buy? Where do people want to sell? Where should I want to buy? Where should I want to sell? Where should I cut? All of this, you know, does my plan involve an average down? All of these things, you know, they sound and they feel like technical analysis. Nah, the technical analysis is the lines on your chart. The trading psychology, the real part of trading is what do you do when those lines show up? And you don't need many trades. You know, we've always had people in here that overtrade. You know, and it's going to be part of trading. And don't get me wrong, like I'm fully guilty of it too, especially being in voice chat now. I give some trades that like I like them, of course, and I'm gonna take them because I'm never gonna alert a trade to you guys that I'm not gonna take myself, you know. But I am 100% without a doubt taking more trades than I was because there's people in voice chat and maybe I'm looking at more things, maybe I'm seeing more things because people are asking me to, but even I can be guilty of taking more trades than I need to. I encourage everybody to do as I say, not as I do. Just because we took 100 trades in June, like or whatever, what maybe it was May, I don't remember what month it was in voice chat. Like I gotta be honest, I hope nobody took all 100 of them with me. I mean, we made money, of course, but like that is way too many trades. And I'll be the first one to tell you, like, I even posted about it, like, that was a mess. There was no reason. I could have made the same amount of money on 50 trades or 40 trades, but we took a lot more trades. I think it was May. Granted, April and May were insanity. But slow down.
River, I've only taken 103 trades this whole year.
Oh my God, my commissions are appalling this year. Yeah, it's insanity. That's good though, and good because, like I said, you need one. Even we got Crashmas in here, so I can talk about
That-
another the week.
That's the same thing with me too. Like my proceeds and cost basis from last year was close to like 100K in trading volume, and this year I'm at like 15K.
Yeah, whatever. Yeah. So this is another one. This is, you know, random stock. Looks pretty nice like this, you know, pretty tradable. Well, you start zooming out and all of a sudden this thing looks like horrible, you know, but this is one me and Crashmas hit. And it was a very, very simple and cut and dry trade. We've sold, we've started to set a base. This is a company with fundamentals that do not support where it's trading. You know, they got some debt and stuff, but they are doing absolutely insane things. I mean, you cannot find a Mag 7 stock that is not giving these people money, and yet they're sitting 60% off of highs, you know? And so it was an easy trade. We hit it a couple times. At least I hit it a couple times. I think Crash hit it a couple times with me. You know, we bought the early dip down here. And then we got what did we hit it here? I think this is the one where you got mad at me that we didn't hit it. Then we hit it again, another dip down here. I believe it was this one. We got this nice pullback. We got back in here. And then finally, round 3, we were lucky enough to sneak in on this one. And so he had asked me about this. This is all I was watching on it. We buy in the 950 to 10 range, no questions asked. We got 50 cents of risk, and we're targeting 12. That's it. You know, we got 50 cents of risk. We're targeting $2 up. That's what it is. I mean, you know, we're trimming at these levels, of course, because these contracts are paying nice. And then, of course, you have to ignore this part of it because this was mostly luck, you know. I mean, we'll call it luck because we were lucky enough to catch that. But cut and dry trade. We know where our entry is. We know where our stop out is. We don't do anything. In between A and B, nothing matters. We know where we want to buy, we buy. I don't remember what our exact entries were, but somewhere down here, you know, and when we come into these levels, we buy. That's all we can do. Sometimes we're right, sometimes we're wrong. You never know what's going to happen, but we just sit there and we wait and then we buy, and that's all trading psychology. Like we slap these lines on the chart and now we let the brain take over. We do not buy anywhere else. We do not. We don't average down. Okay, I averaged down one time.
I got a question, River.
Yeah, we don't average down, unless it's in the plan. That's all we do. So very good question. Yeah, Raphael, a few people were. I actually got a couple of DMs. I got one. I don't know how they pulled it up. They hit like 1900% on them. It was sick. I was very happy for them. How does time decay come into it? So on a trade like this, cheap name, slow mover. You have to understand Greeks. You have to understand, like, we got ridiculed. We had a guy try to tell us, oh, that's a bad swing. That's not a good swing trade. It only moved $1. Bro, that's 10% on the stock. And these contracts are $20 and have 40 delta. We're up 230%. And you're going to tell us it's not a good swing trade? That instantly shows you don't have a super deep understanding of option contracts. But on something like this, you buy time because it's cheap and it's safe. And then time decay, it's going to really, really start to increase. Obviously same days, it's massive, but 2 to 3 weeks before expiration. Otherwise, you're looking at $1 a day, maybe on the contracts, and realistically not even $1, a theoretical $1 a day. So it really doesn't come into play. It also gives you the advantage of delta is extremely accurate. And so, a 50 to 40 cent move or whatever is going to take away 40% of one delta. You know exactly what your risk is. And because you aren't fighting time decay with time, you're good to go. So on a trade like this, what were those last ones we were in? I think they were having like August 15th or something. I don't remember. I don't even as I said, I'm taking like 100 trades a month. I got no idea. But I think they were like August 15th. Yeah, you had a different strike. I was in some a little further out than I should have been probably, but it worked out pretty good. We were in August 15th. They had basically no theta. We knew time. We knew, we knew the technicals were there. We knew the volume was starting to build into there. The bigger deal, there was a guy with a lot of contracts. So I was kind of tracking him. Somebody else, they'd put, I don't remember, 18,000 or something contracts into this trade. So I was, that was some additional confirmation for me to be in there. And so we stuck with it. That is completely different than you would do on, say, we traded IWM today, hit a nice one on IWM today. We bought these around here. And they're just cheapies or whatever. They're $8. I think they're $8. They're $8, something like that. And so, I told people, hey, the stops are under the hourly 20. The unfortunate situation is or not the hourly 20, the 20 EMA. It's the unfortunate situation. We've got an hour and a half to close. If we go below that 20 EMA, these are likely worth $0. It's just part of it, So it's different on every trade, but if you're trading with time, you're letting these trades come to you. We're letting these trades come to you and letting it work. But you still need to use that trading psychology. Analyze your risk reward. Is it something you even want to be part of? Like, you have to think, if you have a swing trade that goes minus 50%, you now need it to go plus 50% for that to even be a 1-1 risk reward trade. And for me personally, I don't, unless it's a scalp. I'll take 1-to-1 scalps frequently intraday, hit some spy calls for whatever it is, $50 and trim some at 55 and know my stop's $5 below me. That's it. So those kinds of things are okay. A real trade should never be a 1-1 risk reward. And if you let a swing trade go down, 30, 40, 50%, it now needs to go up 30, 40, 50% just to be a 1-1 risk reward trade. To be a 1-2 risk reward trade, which is, that's a trade I'd take, and you're letting it go down 30%, your contract now needs to go up 60%, which we all know is a very nice return. 60% is a good return, and doesn't always happen. So always analyze that before you take it and use your brain and say, does this fit my risk reward? And that's where I think most people struggle. Yeah, I love seeing talk about oh yeah, I mean Norvin, you know me, yeah, there's no reason to ever be you know, don't get me wrong, you're day trading some Meta contracts or some Tesla contracts and you need to be $5 out of the money because they're a little bit cheaper. I support that. But my rule is if you are swing trading and you can't afford a reasonable strike, then you can't afford that trade and you need to look for something else. What people don't realize is, oh yeah, you might have your 10 contracts of way out of the money things that are up 1,000%. Good for you. Well, the at the money contracts are dollar wise up the exact same amount, but they had a ton more safety. The biggest difference between out of the money and in the money, at the money, whatever, one of them is going to give you a larger percentage per contract. One of them is going to give you a larger dollar per contract, but they are both, if the trade works and blah, 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 they're both going to end you up at about the exact same spot. But the at the money one is doing it with a whole lot more safety and a much higher likelihood of making money. We've all had contracts where if I was one strike closer, I was printing. I was one strike too far and I lost it all. So closer the money, higher probability to actually make money. An interesting way to look at delta and how it's described, this isn't 100% accurate, but delta is percentage chance of winding up in the money. So when you have something that's like 4 delta and you're way out of the money, that is a very low, probability of going in the money. When you're at the money, you got that 50% chance of going in the money, so you got 50 delta.
Can I add to that, Rev, real quick?
Yeah, for sure, of course.
We're gonna have a position sizing class coming up in a few weeks, guys. But the biggest thing I see are people in DMs or on trade floor is I always just grab 10 contracts is what they'll say. And it's like 10 contracts of SPY or 10 contracts of Meta, 10 contracts of Bank of America are way different. And like it all comes down to position sizing. And the people just say, well, I want to buy 10 so I can trim. It is like the exact opposite of what you should be doing.
It's 100%
Position
right.
sizing.
Yeah. Position size should be thought of in money, not contract count. That always, and so because okay, cool, you buy 10 contracts of same day spies, it costs you $500. You buy 10 contracts at the money Teslas on Monday and you're in it $9,000, $10,000. They're not the same. You have to think dollar amount always. And more contracts is not better, it's oftentimes worse for a lot of people. More contracts is more often than not, it's not better. You just need to trade your proper position size. What was that 238% trade that we took today? It was this. That's what we caught. But that's like, but hold on. I am in no way trying to say we entered right here. We entered somewhere right back here, and then we got chopped. And they went from like $8 to $6 to $8 to $6. I think we even bought it back here because I think they actually went $8 to $12 and I didn't sell. And then they went like $8, $6, $10, $8, chop, chop, chop. And then all of a sudden the volume started showing up and we got the pop, And it was that same thing. These ones aren't like a great trading psychology example though, because like we're buying contracts that expire in 45 minutes and stops are for all intents and purposes at 0. That's not like good trading psychology, but to me you have profits and you understand, I had well, I had a little bit of money to waste, so I bought some of those contracts. I don't want to say waste, we did the best we could. We understood that, okay, these wicks are being supported. We know where our support is. We know where we want to get in here. We know we've had strength on it. We know we've held view up. We know we've broken trend. We are setting higher lows. So everything's telling us the trend is coming. Then I play a little bit of my gut feeling. Can't lie that, IWM seemed ready to pop some more. So we buy those contracts and we let it work. Yeah, position sizing actually is going to be epic. Very, very, very excited for that. And proper sizing is what matters, like if you got a $5,000 port, let's just say, I'm going to tell you right now, you should realistically be trading $250 to $300 position sizes. I know you don't want to hear that, and I know it's not glorious, but that's the truth. I know other people try to say, oh, 10% of your port in a trade. And don't get me wrong, you got a $500 port, Good for you. Good for trying. Be safe. It's very, very hard to not find yourself with more than 10% of a trade in a reasonable contract on most things. Don't get me wrong, me, 1K, all of us, we trade tea, Coca-Cola, Bank of America. He trades DraftKings, he trades Walmart. I mean, there's plenty of names out there with cheap contracts that fit a $500 port, but they aren't glorious. People want same day spies and stuff. And so, but you should stick to 5% or less of your portfolio, in my opinion. People who push 10%, that's getting pretty risky. When there's no reason to lose 10% of your money in one trade, that's bad trading. I know other people push that pretty hard in VC. I've always 100% disagreed with that. It's one thing if you're trying to do a challenge account and grow it fast and you're over leveraged, that's a different situation. Somebody really trying to learn, size small. If you've never seen me talk about compounding gains and how they work, feel free to reach out. I'll send you the calculator. 1% a day is going to give you 1,200% on your port at the end of the year. So you don't need to risk it all to make great money, Recommendations for trading books, it's tricky. Technical Analysis, Al Brooks, Anna Cooling, Linda Raschke, I love. That guy who wrote the Bible on TA, I'm forgetting his name. I think it's Mueller. That one's really good. Trading Psychology, like I said, I've really just read your Mark Douglas's. Andrew Aziz, I believe his name is. He's got some good ones. Tom Haugard. I do have to give the disclaimer. That's Trader Tom for anybody who doesn't know. Trader Tom is mental game of trading. That's a good one. Trader Tom is the embodiment of do as I say, not as I do. He is amazing at, and don't get me wrong, Al Brooks taught him a lot. Like that's one of his mentors. He teaches good technical analysis, good trading, really good trading psychology. And then he gets on his computer and he full ports, Forex stuff. So he's this, do not trade how he trades. Trade how he teaches you to trade. I always have to give that disclaimer with him. No denying he makes money. He also loses huge money. So he teaches people to use small risk and then uses appalling amounts of risk himself, so do be cautious with Trader Tom. No disrespect to him or anything like that, but he's definitely a do as he says, not as he does kind of guy. And if you want a list of books, feel free to reach out. I can send them to you. Okay, well, with that, everybody, thank you so much for being here. Anybody got any questions, concerns, comments, ideas? I know Norvin's got charts, but we aren't getting into that yet. But I'll stick around. I know we got a little late there. I'll stick around for another 5 or 10 minutes, but then I'll probably call it. I'm sick and hot.
Yeah, hey, River. Appreciate you sticking around while you're sick, man.
Yeah, of course.
I've had, and I took a long break from trading, then I kind of came back, but I've had situations where I'll like cut something and then it's like almost immediately you just see it like skyrocket back up and it's like, ah, damn, I should have like held it. Like,
So
you
I
got
got
any?
I got great advice for that. Okay.
Yeah, thank
So
you.
this is the thing. This is a thing very common in retail traders. And Al Brooks talks about it. They stop out when they should be buying more. That's what he says. I'm not saying you should be buying more, but what he's really saying is the same as we really just harped on just now. Zoom out. We have, people have this propensity to, we'll just go back to this one. They have this propensity to, they want to buy here for whatever reason, but they don't want to buy down here where they should really want to buy. And so if you're ever going to cut a trade, the best advice that I can possibly give you before you stop out, zoom out. It will solve so many of your problems. And you will oftentimes see and look and be like, okay, well, this is support right here. And don't get me wrong, you still have to follow your plan. You still have to do all of that. You should have been zoomed out before you took the trade. And it is important. Something that I always teach is when you enter a trade, anything that happens between stopping out and taking profit, is noise. Nothing else matters. You don't stop out early, you don't take profit early, you know. Well, I mean, of course you trim, blah, 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 you know, but zoom out, it will solve that issue for you. You will, you know, because of how retail traders, and I should say, I'm not trying to say this is exactly what you're doing or anything like that, because they have this issue with like, oh, green candle, I'm buying calls, you know, they oftentimes find themselves in a calls at resistance situation, or, you know, big red candle puts its support. They often find themselves in these situations where, you know, they bought when they should have been selling and they sold when they should have been buying. And a simple zoom out will really tell you what you need to know. And
Can I add to that, River?
yeah, please.
I don't want to hijack your lecture.
No, I love having you here.
One thing that I've done that's increased my success rate a little bit is, if you notice my tab, I'm saying starter position or half position. So, you know, whatever the dollar amount is, you know, of 5% of my port, let's just say it's $500. I always go in at 250 because it's kind of a two-part answer. So what River mentioned earlier that Tilio taught us is, you know, paying for the premium, paying for the confirmation. So often on my entries, when I put it in the tab, the entry that I wanted was about 15% and go, but I'm giving that up for the confirmation. And then if it goes against me in that 15 to 20%, that is always, I always say, hey, the start of my cut point is at this red zone. I will often add to that, because if I'm right, I just got a better average and I'm now in a full position. And if I'm wrong, the second half of that entry is basically break even or a couple percents that I'm wrong. And I would just originally stop out of that original position, basically, if that makes sense. So what you can do, I'm not sure if I answer that question, is start at a half entry size. And you're like, okay, you know, SPY, you know, my cut point is, you know, wherever it's at in the chart. I will often add to that, but then you have to have, you know, the mental strength, you know, an emotion to just say, okay, I'm wrong, I'm cutting, even though I added and my, you know, my percent is lower.
Exactly.
Does that make sense? I mean, you got to really, it takes practice, but like there's many times where I'll just tell people, you know, I want to see if I'm in calls, I kind of hint, I just see, I want to kill candle that slices all the way through my support, or I want to see a 15-minute close, like, because they'll oftentimes they'll wick right at your stop out zone, but then they'll buy it up. And like, that could be your example where you're like, shit, I stopped out. But if you add that second half, you're now at the original entry you wanted, you're at a lower percent. And now you basically, you know, money wise, there's more risk, but percent, you're back to your original trade plan.
Yeah, I think one thing for me, because it moves pretty quick sometimes, the market, you know,
Yes.
like I'll be playing with AMD or something, and it takes one of those quick dips, and I'm like, oh shit, like that wasn't part of my plan, you know. But you look at what happened with that XLI trade, where down that, you know, whatever 70%, whatever it was, and then cut it, you know, just move on to the next one, and then next day, like skyrockets, you
So,
know.
and so again, so let's just go for that one. XLI, you got a nice consolidation here. I don't exactly know where you guys entered. We call it right here. Okay. So, and again, I'm just making this up. You know, I don't know where you guys entered. I saw that trade happen and I knew, you know, people got a little smoked on. So you look at this and you look at your short time frames and you say, God, we're breaking down. You know, I got to stop out. You know, I got to stop out. Well, zoom out, go to your daily time frame. Go back just a few days. Where should you have been looking to add? 148.13. Where did people stop out? 148.40. It's this issue that retail traders have so often, where, and don't get me wrong, you're down 70%. I got to be real, I would have been out of that trade ages before I was down 70%. I know that this thing was like, you know, that's those types of clobber things, they hurt you, you know.
It was a learning experience for sure.
Yeah, and it's a learning experience, but always zoom out. And that was one I saw people stopping out, and that's what I did. I pulled up the chart, and this candle was ugly, you know, and I was like, I saw it, you know, on the 5-minute. I was like, oh yeah. And I pulled up the daily chart and I saw this, and I was like, well, I mean, I know they're way out of the money, but I'll tell you what, I probably would not be stopping out myself. Like, I mean, I would at least be looking for a bounce and basically saying like, I'm down 70%, I'm eating it, you know? Another one, and you know, I get that it was an earnings trade. 1K and I both talked about this today. You look at Bank of America, okay? And so, you know, Bank of America was down or whatever. Where's the strongest support on the chart? 45.40 to 45.60. So you're down on Bank of America. Where do you add? You know exactly where to add. And I know those went back to profit and they had time and they had blah blah blah. But there, you know, when you have that kind of time, you do have to say to yourself, is it worth reducing my cost basis? And when you are provided a sell to what I would describe as the best entry on the chart, like me personally, for how I trade, I wish I would have seen it. Like, I got to be honest with you, I didn't see it until I was already ripping off of it. I would have hammered Bank of America right here on the back of a halfway decent earnings, you know, no brainer to add to your position here. And then of course, nobody wants to add until up here. Oh, we're almost break even. Should we average down? No, no. Like, don't bring your cost basis down $4 when we could have brought it down $40. And I'm just making those numbers up. But always, always, always zoom out. And don't zoom out to a few days ago. Zoom out if it's a week ago, a month ago. Zoom out as far as you need to zoom out to, you know, see what you need to see. And I think it'll solve almost all problems for you. But I do got to point out what Johnny's saying in the chat right there. It is 99% of the time, it is better to take the tight stop out and look for a better entry. Yeah, almost always. You lose less and make more. Like, there's really no argument in any situation that that's not a better idea. Don't get me wrong, we all have trades that get away from us on occasion. You know, I'm gonna level with you. I got some AT&T calls that are minus 98% right now, and when they expire tomorrow, they're gonna be minus 98%. Sometimes trades get away from you. You know, it happens to absolutely everybody. And I'll happily post the position too if you guys want to see it and laugh, you know. I'm happy to post it. It happens to everybody. But if we're here and we're trading and we have control, it is almost always going to be a better idea to take the tight stop and look for a better entry. Oh, and then I did see something. I saw somebody ask up here. Oh, it was Johnny. What's more important to me? Percent versus dollar in the contracts. I'm assuming you're talking about profit and loss. Percent. Like, that's how all things are analyzed in the market. I won't say never, but go to a hedge fund. They aren't going to tell you we made $1 billion this year. They're going to say we made 10%. Go to a good, you know, a professional day trader. How'd you do last year? I did 12%. Everything's a percent. You know, our profits are always in percent. You know, I get ridiculed for it all the time. You know, from people like Mike, of course. You know, we hit some AT&T calls. They paid $4 a contract. That's nothing. I'm not trying to tell you that $4 a contract is going to, you know, change your life. Well, they were $1 and we sold them for $5. So we did a nice little 400% return. Sure, if you got one, you made $4. If you position sized accordingly, you just turned 200 into 800 or 1,000. You know, I'm not saying that anybody should have bought $1 200 contracts at $1 contracts or anything like that, you know, but it's percent rules the market. I mean, it's very, very, it's a very, very like unique younger retail traders thing to have this money, you know, money. How much money did you make? How many contracts did you have? None of that matters. First off, none of it's, you know, mine or yours or anybody else's business, but all that matters is that percent. And you know, like, oh, that person's 100%. I don't care if you turn $10 into 20 or 100 into 200. None of that matters to me. You hit 100% trade. Real traders, big money traders, as well as, you know, professional day traders, we all think in percents. And that should help a lot of people, because I don't care if you are trading a $100,000 account or a $500 account. I'm going to treat you all the same. And so I just want you to see, you know, see those percents, see your port grow, you know, be proud. Like, oh, I put up a 5% day on my port. congratulations. I don't care. I don't care. And older people, we don't care, you know, like 1K ain't gonna care, you know. We don't care how much money you made. We're gonna tell you, good job. Like, great, you made money. Like, mission accomplished. You added a couple percent to your portfolio. Congratulations, you did the job. Give yourself a pat on the back. I doubt I've ever asked somebody how much money they made on a trade. I can't like 100%. No, I've like asked Shark, you know, like I, you know, I guess I probably have asked people, but it's like best friends, you know. It's not like it's nobody's business how much money you're making or anything like that. Always like, and look at my screenshots. It is very, very rare that you'll see the size of my positions. It's always going to be a percent because that's all that matters. You know, that's all that matters in the world of trading is percent. And it doesn't matter how many percent you're green. You know, if you're 5% green on a contract, nice job. If you're 500% green on a contract, nice job. I treat it all the same. I'm happy for you no matter what. You have more money than you started with. You did your job. That's all that matters.
That was really good, man. I appreciate that.
Mm-hmm. So Chanimal, great question. I will never, I'm telling you right now, I will never, ever, ever give you a stop loss based on a percentage. Tilio will never. Shark will never. 1K likely will never. I'm speaking for him right now, but you don't stop if you're trading your portfolio or your profit and loss, there is a very good chance that you're over leveraged and you're worried. You're watching that money move, you know. I stop out because the chart tells me to. Wonderful trading psychology thing right there. I stop out when I am given that technical reason that my trading plan has been invalidated. That's when I stop out. If you know, I mean, we can just go back. I mean, we can go back to these Bank of Americas. I stop out at 20%. Well, cool. You stopped out at support. You know, like that's all there is to it. You know, it goes back to that. Like, if you're stopping out on percentages, you will very oftentimes find yourself stopping out right where the bounce is going to come. Also, where you likely should have waited for entry in the first place. You know, but always, yeah, that's true. Yeah, exactly. I get excited for that. Nice one, dude. Boom. Love that. God, I get so much happier when other people are making money. You know, I mean, that's like, that's what it's all about for me. That who cares if I make money? Like I'm just here to watch you guys like make money and have some fun and like you just gotta laugh at my bad jokes every once in a while. That's all, you know. But never on percent. Yeah, trade you some books. Remind me tomorrow, and I'll happily do that. But with that, you guys, I'm calling it. I'm tired. Yeah, Rudy, thank you. 1K, thank you so much. I love it when you join the lectures, and thank you for joining in. Thank you, Robs. Everybody is always here. Rudy's always here. All of you. Crashmas, thank you, thank you. And great lecture. Good questions. Thanks for listening to me. Yeah, and yeah, I will. And we'll catch you Friday to completely disregard everything. Oh yeah, send me a DM, Livens. Yeah, Crashmas, you too. Bring questions. And then you know, let's have some fun tomorrow. Let's throw all this trading psychology stuff out the window that we just discussed and you know, have our little degen Friday like we like to do. It's the one day we forget about trading psychology. Yep, thank you everybody, and we'll talk to you soon. You DM'd. Okay, yeah. So you know, I'm just gonna level with all of you. If anybody DMs me for either books or you want that you want the compounding gains calculator, any of that, I'm gonna be real with you. I'll send it to you tomorrow. But thank you everybody. We will talk to you soon.